Boy, that time just flies right by when you're having fun, doesn't it, guys and gals? Welcome back. Welcome back. It's time to get back to work. Time to get ready for tomorrow's trading session. As always, my name is Joseph, and welcome back to your nightly newsletter. Now, if you're here for the first time today, great to have you with me because I help traders just like you find high-quality setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job is a little bit different tonight. My job tonight is to help you guys and gals find the best levels of support and resistance for tomorrow. I'm going to help you pinpoint the best entry setups and exit targets for tomorrow. And most importantly, how can I forget, my job tonight is to help keep you out of trouble in tomorrow. That's Wednesday's trading session. And we got a lot to cover here tonight on this video. We'll grab the calendar for tomorrow, get some big news right around the corner, as well as news coming later on the week. I want you to get a good eye on what the good times to avoid tomorrow are going to be, and I got all the charts all prepped up here in the background. Got some crude, some S&P, some Nasdaq, and of course that yellow metal, right, those gold futures. I'm going to jump in first tonight on the newsletter to get us ready with the schedule for tomorrow. Let's grab the economic news calendar. Let's plan the best times to trade and the best times to avoid tomorrow. Let's grab that website here right now over at Econo Day, and let's grab now that calendar for this week. Now, as I mentioned earlier on in the week in last night's newsletter, the big news of the week here is coming later on Friday. So Friday is the big news, right? We're not going to worry too much about that tomorrow on Wednesday, but as of tomorrow night's newsletter, we'll start talking about how traders will start to prepare for and how the markets will likely react to the employment number coming later on this week. So make sure you come back and join me again tomorrow night to make sure you're ready for Friday morning's trading session. That, of course, is the big news of the week. Tomorrow, though, looking at the news for tomorrow, as you can see, we have two major news events. The first one, of course, is that Adp Employment Report. Now, this sounds like a very busy, important news event, and it definitely has potential to, but it's about 50-50. Sometimes these numbers produce a nice big reaction. Sometimes they don't. Sometimes they're kind of sleepers, if you will. So tomorrow morning, 8:15, you'll want to get to your desk early. If you're with me tomorrow in the trade room, we'll have a front row seat for this. We open up at 8 o'clock every morning in our trade room. That employment number coming out just a few minutes afterwards. So you definitely want to be paying attention as we get closer to that 8:15 time frame tomorrow morning. Hopefully we'll get a pretty big reaction to it, and if we don't, right, we'll keep on waiting, because later on in the morning we also have another big round of news here at 10:30 Eastern time. Now 10:30 we have the Petroleum status report. This is the weekly inventory report for crude oil markets, right? So the CL, the light sweet crude oil futures contract, that is really the only market that'll be affected by this tomorrow. Maybe a little bit of natural gas, but I'm an oil trader myself. I don't trade natural gas. It's just too illiquid and unreliable. But the most important thing here for tomorrow is, if you're an oil trader, we've really got to make sure we get in early tomorrow, because as the day gets later, as we get after 10 o'clock, 10:15, we run to that buzzsaw, that petroleum status report at 10:30. And oftentimes, that produces some really big, violent, unpredictable moves. So we talked about some times to look for tomorrow, right? I'm definitely looking for a good reaction to that news at 8:15. So we'll be definitely looking for setups 8:30, 8:45, 9 o'clock tomorrow morning. But then as the day gets later, we really got to start watching the clock, because after 10 o'clock, 10:15, we're going to start seeing the crude oil market really slow down, and then bam, right? Like a jack in the box, right? Usually jumps up and down all over the place. Very volatile reaction to that petroleum status report. So get to it early tomorrow if you're a crude oil trader, and really try to avoid all of those choppy, volatile candlesticks after we get that 10:30 news. Usually by about 10:45 a.m., all the commotion will calm down, and we'll get a chance to update our charts, reassess momentum, look for ranges, and find some setups afterwards. So tomorrow morning, again, don't forget, come out and join us tomorrow and every morning at 8 o'clock Eastern Time. We'll be keeping our eyes open for the Adp Employment early, and then later on in the morning, we got to worry about that Petroleum status report at 10:30. So these are the major known news events here for tomorrow. But remember, we have a lot of known unknowns right now. We, of course, have the U.S. and China's trade talk, right? We haven't heard much out of them over the past couple days. They're supposed to be signing that trade deal Monday, Tuesday, Wednesday next week. And I'm surprised that we haven't heard as much as we were before the holiday came. That is something we may hear right tomorrow morning as well. And the reason why we haven't heard about the U.S. and China is probably because, right, all of the hoopla right now, the tit-for-tat retaliation of the Iranians, right, in the U.S. So we know that's probably what's kind of stolen the limelight, right, from those U.S.-China trade talks. That is also something we'll be watching here. And of course, as I mentioned in last night's newsletter, we're wondering why oil is so bearish right now, right? Because you got that tension building there. It clearly shows us right now the world clearly doesn't think there's a threat to the supply of oil, but that may change, right? At any point here, we may see an escalation in the Middle East, and that could really get things moving for us as well. And then if you're in the London session, don't forget, right, they promised to get Brexit done by January 31st at the end of this month. If you're in the Asian session, in the European session, you definitely want to keep an eye out for those known unknowns, right? So we're definitely looking at a lot of moving pieces right now. I've got some big news on the schedule tomorrow. I've got some major news later on in the week. And really, I think I speak for everybody right now. We're all kind of waiting to hear any new developments regarding the U.S. and China Phase 1 trade deal, the Iranian and U.S. conflict here, and of course, any updates on Brexit. We'll keep our eyes and ears open tomorrow. Obviously, those will shake the markets up. We'll have to regroup, rebalance, reassess, right, once we see those, again, known unknowns start to come out tomorrow morning. Come on, join us tomorrow. We'll do it together. That way, no matter what these markets give us, we'll always have a chance, right, to make some good profit. Next up here, now that we know what our schedule looks like for tomorrow, let's grab a look at these charts. I got some crude oil, S&P, Nasdaq, and of course, the yellow metal, right, the gold futures to wrap things up. Let's jump in first here to the oil market. And, oil is pretty straightforward. We have a bearish trend going lower. Anytime I see a bear market running lower, I always know I want to sell, and I want to sell at resistance. Now, where's an easy level of resistance? Well, check out this triangle. As we go lower now, the market looks like a triangle to me. Now, triangles are very, very big clues, because what do triangles tell us? Triangles tell us to focus on the edges. If you're looking for a great area of resistance on oil, focus on the edges of that triangle. That's a very big clue. So we know we're bearish. We know we want to be a seller at resistance. So we've got some great levels of resistance up here at 15, right, all the way really up to that 63.42 level. And then, of course, don't forget additional levels of resistance here. I've drawn a trend line off of those lows. That gives me a beautiful hidden channel. That's going to be a great area of resistance as well. And then you know me, anytime I have a trading range, I'm always looking for those expanding triangles, right? That expanding triangle, that trend line up there will be a great spot to get short. And you'll notice they're all stacked up right along the same spot there. I've also got that prior low over at 63.60, and it's easy to see we have quite a bit of resistance. So we know we have a bear market on oil. We know we want to be a seller. I got plenty of resistance I've identified here overhead. And of course, I want to literally go up, and I want to sell right off of that level of resistance. Now, with this trading range, anytime I have a range-bound market, we also know that there's potential to buy the low here. So there is potential here to buy this market as it goes down as well. So we really have quite a few options right now to make a buck on crude oil in tomorrow's trading session. Just remember, though, we want to get to those trades early tomorrow. So don't hit the snooze button too long. We want to get to those trades early tomorrow to make sure we don't walk into that that drama that comes out around that inventory report at 10:30 Eastern time tomorrow morning. Okay, so we know what we want to do here. I want to be a buyer off the low, but most importantly, I want to sell off that high. Here's a couple things I want you to think about as we go higher here. Keep your eyes on that area, right? Keep your eyes on that area right up around there. And ultimately, you can see we're kind of sitting right inside of that range right now. Stay out of the range middle. You don't want to trade the middle. What I want to get is I want to see us get up into that sell area. And I'm hoping that once we get up into that resistance area, buyers will come over, they'll try to buy that pullback, and at that point now, I'll be able to sell into their stop losses for a move right back down in. You can see a lot of examples of this, right? Every time the price goes up, the buyers try to hold it and they fail. We go up, the buyers try to hold it and they fail. We go up, the buyers try to hold it and they fail. That's pretty much what we're looking for here on the chart tomorrow. I want to get up in that area of resistance. I want to get those buyers to commit to buying that pullback. It's not a bull market though, it's a bear market, right? And we know we're walking right into resistance here. So as the buyers try to buy that pullback, I'll be looking tomorrow morning with all of our clients in the trade room. I'll be looking for a failure pattern to sell off of that high. Now, you might be wondering, how could this market turn bullish? Well, let's say we do go higher here. I'm going to look for a chance now to sell into that buyer failure. But if those buyers, if they can hold on to it and give me a nice strong run higher, well, now we have what's called a 1, 2, 3 reversal. So if we do get that reversal, remember, we're not trying to predict a reversal right now. We're trying to wait for that 1, 2, 3 reversal. If we do get that reversal, I'm looking for that higher high in price. I'll draw that trend line off those highs, bring it down to that low, find that hidden channel, and I'm looking for the buy running higher here. A very, very easy setup if we get the 1, 2, 3 reversal. Now, we got some news tomorrow, so there is a chance here we may see the 2-try breakout here as well, which would be a strong move up, a higher high in price, followed by a trap low, right? That'll be a great way if the market just simply takes off to the upside. Right? So one scenario would be we go up, the buyers try to buy the pullback off the moving average, right? Buyers try to buy the pullback off the moving average. We know where their stops are. This is what I'm looking for tomorrow. I want to sell off of those highs using a failure pattern. If not, 1, 2, 3 reversal, mark up the high, mark up the low, buy the low of that channel. Or if we really run higher here, right? I don't want to chase after it. I'll look for a trap, right? Look for a trap here and make sure you see how I draw that pattern. It's a higher high, bears try once, bears try twice. And I'm looking for that trap. The best case scenario is a trap, right? Minimum criteria would be a double bottom there. And where's my target as we try to go higher? Target is easily back up to retest that high at 64.72. Now, what if we go lower here, right? We know what the plan is as the market runs higher. What if we run lower? Well, first of all, let's take a look to the downside here, because as you can quickly see here, there is still plenty of space. If we can get this market to collapse, I get a big target down there at 60.64. However, we're inside of a range right now. Remember, this is a range. What do ranges tell me? Ranges tell me to buy low and sell high. I want to sell high above the high with that failure pattern, but what if we go lower here? How do you buy in a bear market? What's the best reversal pattern that I know? I call it a crown reversal pattern. I'm going to wait for the price to run lower. I'm going to let the bears try once, let them try twice, and then we'll look for that rally going higher. You'll notice it's a very similar pattern to that failure pattern to sell high. To be a buyer, though, you're going against the trend, and to be a buyer going against a trend, I've got to give those bears the benefit of the doubt. Let them try once, let them try twice, and then we're looking for that run going back up into that trading range. And don't forget, if you get the reversal off the low, oftentimes the pendulum swing. So the amount of the move down will be the amount of the move back up, right? So think about that for your targets if we can get that crown reversal off of that low. So again, get that run down, moving average comes over, bears try to sell it once, they struggle, they try twice. Again, you're giving them the benefit of the doubt, right? Basically, you're allowing all the sellers to get in, and then right when they fail, we are literally buying right into those stop losses. And again, right, the size of that move down, size of that move up, think of that as your target on the opposite side. Now, how do we get short down here? There's two basic patterns looking for here. Again, you do want to make sure you know where you're trying to go. 60-64 is the target. One of them is that 1, 2, 3 breakout. Again, you don't want to sell just to move lower here because it's a range, right? Last time it went lower, it kicked right back up in. So I want to make sure I wait for proof. Strong move down, that's not enough. Pull back to the moving average, strong move through. That's called a 1, 2, 3 breakout, or a 1, 2, 3 reversal. It's going against a trend. Mark up those lows, mark up that high. Notice how I draw the hidden channel. I like to find my hidden channels off of those highs, and again, I'll look for that sell off the high of that channel. Now, if the thing just collapses and it really runs lower, buyers try once, buyers try twice, right? And look for what I call a 2-try breakout pattern. The ideal would be a trap high above that prior swing. It's not required for the sell side, but it wouldn't be bad at all. So again, if we do get that strong run lower, if it really takes off to the downside, don't chase after. Remember, we want to make sure we sell as high as we can. Let those buyers try once, lower low, let them try twice. And again, ideal would be a trap above that high, right, for that move going back down in. Again, 1 try for the buyers, 2 try for the buyers, strong signal candle, and we're selling it down to that 64. So now we got a pretty good plan here for crude oil. And tomorrow, like I said, news at 10:30. Make sure you get there with me tomorrow. Right at 8 o'clock, we'll start hunting for setups early in the session tomorrow. Oh, and speaking of setups, if you're not a member of mine, if you're not going to be with me tomorrow in our trade room, I would highly encourage you, make this easier on yourself. Do it with me for a couple weeks, a month in our trade room, and you'll find this strategy very, very easy to learn. But if you're not a member and you'd like to get a deeper dive into all of these patterns, all of our failure patterns, our crown reversals, our breakouts, right? All the patterns we're talking about tonight on this video, I would definitely grab that free course in the upper right-hand corner. I'll put a link up top here in the upper right-hand corner. Grab the free trading course here at School of Trade. Learn my 4 favorite entry patterns. I'll send you hundreds of examples of how we apply those patterns to our favorite markets. So pause the video if you want to, but whatever you do, grab that link in the upper right hand corner and get registered as a member of our free course. That way you can learn all the setups I'm talking about on this video. That way you and I can get the most out of working together every evening on our nightly newsletter. So now we know what the plan is for the oil. Get to it early tomorrow. How about some S&P right now? The S&P, as you can see right now, is quite bearish. We had that big move higher here, right? Yesterday, we had that beautiful nested failure that almost made it all the way back up into that range. If you recall from last night's newsletter, we talked specifically about the best pattern to trade those deep pullbacks. Excuse me. We got pretty much everything we expected out of the S&P, except for the fact that we didn't go back up to retest the high. So we got the deep pullback, we got the what I call a nested failure, 1 try, 2 try, and the buyers just couldn't get it. They just couldn't make the move here, and it looks like we finished the session here with a range. Now, because those buyers were unable to retest the high here, and then of course you got that strong move down right now, it's very difficult to see this as a bull market. It's very much a bear market right now. I would say bears have momentum. You can easily see that strong move down, that lower low. I have a hard time calling this a bull market right now. So we know we have some bearish momentum on the chart. Bear momentum tells me what? Sell at resistance, right? Now, we also have a trading range. Now, what does a range tell us? Range tells me to buy low. It tells me to sell high, right? So I already know right now I want to be a seller up top, but we're not there. We're down bottom right now. So even though we're bearish, I can't really sell down here, right? I want to buy low, sell high, and as you can see there, right, I want to avoid the middle, right? The no trade zone, avoid that middle. So we know where we are. We know we're bearish, but we know we're sitting underneath a range. And what do we do underneath the range? We look to be a buyer, right? Now, of course, with that said, I can buy underneath that range, but what's the best pattern for me to buy for reversal, right? Basically, it's a reversal at this point. We just talked about it on crude oil, didn't we, right? So as we go lower here, there's a couple things you want to think of here right now. First of all, it's a very strong move down. Okay, I would be waiting very patiently if I were you. And again, we'll do this together in our trade room. So not to worry if you're a member of mine. We'll walk you through it together in the trade room. But there are really kind of 2 scenarios I'm looking for right now to be a buyer. One scenario is expect to see a second leg, a lower low in price. Remember, anytime we see a strong move in one direction, we expect to see another leg. So I would anticipate we're going to probably see another leg going lower. Now, once we see that second leg, once we get 1 and 2, now the bears will have kind of accomplished what they were looking for. And at that point now I can look for my failure into pullback combination and run this thing back up into that range. So this is a kind of a 2-step process. One is going to be to wait for the completion of that second leg. Then once we get that second leg, then look for the sellers to fail off the moving average, failure pattern, or right, the sellers failing above the moving average, buyers coming in and buy that next pullback. This is a very common kind of sequence, a failure into pullback combination, right? Again, this particular pattern, make sure you see it's 1 leg, it's 2 legs. The 2 legs is really the most important part of this. Then it's a seller failure, right, into a bullish pullback. Now, there's always a chance that when those sellers fail, the market may run back up into that range. So what you don't want to do is you don't want to chase after it inside the range, okay? That's one thing you don't want to do, because a lot of times what happens is it runs back into the range and it will give you one last shot for a trap. So here's another scenario I'll be watching for tomorrow with all you guys in the trade room. A failure pattern. Again, it all starts with that second leg first, then failure into trap pattern, right? Well, 2-try trap pattern going higher here. And again, right? All of these patterns are outlined in a lot more detail. In fact, I'm going to show you hundreds of examples of how we apply those patterns to our favorite markets as part of that free trading course. So make sure you grab the free course in the upper right-hand corner. Now, here's the second scenario to be a buyer, and that would be a crown reversal. Just like on oil, this is the same pattern right now if you want to buy the low on oil. Bears try once, bears try twice, and because this is a counter trend trade, I'm going to look for that trap low. That's going to be the secret sauce there, right? Remember, it's a very strong momentum down. Not only are we overall bearish right now, but we have a strong move just recently. And that strong move recently says they're going to try to get that next leg. And when they do try to get that next leg, give them once, give them twice. If they can't get the job done, then trap low, nice strong signal, and we're back up into that trading range. We call that a crown reversal pattern. Now, one more scenario here. Let's say we hold that pullback and run lower, right? What's the next plan now, right? We're expecting to see a second leg here because all that momentum, right? What if it holds and runs? As long as we can see strength going below that measured move, I should be able now to mark up that low, mark up that high, and look for that sell off the high of that hidden channel. This is just like a 1, 2, 3 breakout pattern. 1, 2, 3 breakout. We've already got the strong move down. If those sellers, if they can hold that pullback and make a nice strong shot lower, okay, none of this stuff hanging out at the measured move. Nope, nope, nope. Get through that measured move on strength. Once we get some strength, now we know we can go out, mark those lows, mark those highs, and of course we're selling off the high of that hidden channel. Where's my target if we start selling short on this? It's right back to that low from Monday morning, right? 32.08. That's a great opportunity for these bears, but they got to hold this pullback. Now, how about selling overhead? Okay, this is probably the most complicated part of this strategy. For example, let's say one example would be we run back into the range and we chop around for a bit. What that will do is that will absorb the momentum of this market, right? That will absorb all momentum of the buyers. If that happens, if we can sit inside that range, then I wait for the price to get above the range. I've got that trend line drawn overhead. That will be ideal. Wait for the buyers now to try to buy the pullback. And again, because we are overall bearish, right, I'm looking for that failure going back down into that trading range. A buyer failure pattern above the high of the range and inside the battle zone at that level of resistance. Very, very important to look for tomorrow. But here's a curveball for you. What if the market just runs? What if it runs higher? See, in this case, though, now if this thing runs higher, this thing's very bullish now. I wouldn't say it's a bull market yet, but I would say it has a lot of potential. And whenever we get a big, strong run like that, anytime we see a strong move in one direction, what usually happens? We usually get a second leg. So what you got to remember is when you see a strong move going through the range, if I want to be a seller, I'm going to have to let those buyers try once, try twice, and then I can sell it back down. Ideally would be a double top or a trap high. Minimum, of course, would be a clear second try for the buyers. The ideal scenario is a double top or a little trap high above that first try for those buyers. Does that make sense? Hopefully it does, right? We get stuck inside the range. That absorbs momentum. Now we can use a straight up failure pattern to sell off the high. But if it runs right through the range now momentum is way too strong. I want to let them try once, let them try twice. And again, ideally, it's a trap high above that first pullback, right? Worst case scenario is it's just a strong second try. Look for that nice strong candle, and we're selling it right back down into that range. So right now, we're bearish. We want to be a seller, but I'm not going to lie. I can see two easy setups right now. We're waiting for to be a buyer off of that low. Again, either a nested failure, right, or wait for that crown reversal pattern. We're looking good here now on the S&P. Over to the Nasdaq. Nasdaq is very similar to the S&P, but quite different, actually. The Nasdaq, as you can see here, is still bullish, right? I wouldn't call this a bear market, right? The S&P clearly pulled back and went sideways. The Nasdaq went straight up and just went sideways there. So there's very little that you could do to call this a bear market, right? Now, don't get me wrong, there's that big move down, so we definitely do have momentum for the bears. So the S&P I would call a bear market. The Nasdaq I would call a bull market. A bull market that now is going into a range. So what does a bull market tell me? Buy at support. Got some great levels of support down here, right? What does a bull market tell me? Bull market tells me buy at support. We're right off that support level right now. Bull market tells me, right, buy off support. So we're in a great spot right now. All those prior swings we talked about from last night's newsletter, right, we're in a great area of support. The problem we have, though, is that momentum. That's a pretty scary move lower, right? That's a pretty intense move lower, right? So we know we're bullish. We want to buy at support. I also know I have a trading range right now. What does that trading range tell me? It tells me buy low, it tells me sell high, and it says stay out of the middle. Okay, I want to buy underneath the range. Okay, and really at this point, I would normally look for a straight up failure pattern, but because that move is so darn strong going lower right now, it's almost identical to the plan we had for the S&P. I got a strong move down. I'm anticipating another leg through. That would pretty much satisfy the itch for the bears. Then get that moving average coming over. And again, it's going to be a seller failure, right, into pullback combination. A great combination setup. We find a lot of these in our trade room. And again, I highlight a lot of these in our free trading course that I mentioned earlier on. It's all linked up in the description of this YouTube video. So again, scenario number one, right, buy setup number one I'm watching is going to be a completion of the two try, right, second leg down because momentum, and then look for that failure into pullback combination. Now, another potential setup here will be that crown reversal, right? As we go lower. Now, remember, we're overall bullish. So really all we need here is we just need the bears to try once, try twice, and we can buy it back up. Now, don't get me wrong. That's kind of the minimum criteria. What I really want to get, though, is I want to get that trap low, right? That will always be almost a guaranteed winner. It's almost a guarantee. I can't really say the word guarantee in anything anymore, right? I mean, it's been many years since, right, we've had the financial crisis, and so the word can't happen doesn't exist anymore, right? We know that anything's possible. Nothing is ever guaranteed. But these strong moves down, right, we want to buy underneath that range right now. Got to make sure we respect those sellers. One try for the bears, two try for the bears. And again, ideally, you want to get that trap low. Worst case scenario is just two clear attempts for those sellers. What you're doing is you're letting those sellers fully commit to it because they've got so much strength. And then once they commit to those 2, 1, 2, now you know any strong green candle, we're buying this thing right into those stop losses of those sellers, right? And again, don't forget, when you buy underneath a range, measure it. The amount of the move underneath is the amount of the move overhead. So again, I'm just kind of drawing this up right now, but think of this as your big target, right? Target 1 is the opposite side of the range. Target 2 is the pendulum swing, right? We've also got that trend line coming up as well. So I really like the idea of being a buyer on this Nasdaq right now, but I don't like the idea of stepping in front of this little bearish freight train, as we say. Now, what if those bears hold the pullback, right? How do we sell this market? Just like on the S&P, right? It's a very strong move down. That definitely sets the table for the sellers, but now the sellers have to prove to us they mean business. Give me a strong shot off the moving average. You'll notice they have not been able to hold those pullbacks yet. They've had a couple strong moves down. The buyers keep on mopping the floor with these sellers, but if we can get the bears to hold, I'm going to mark up that low, mark up that high, and looking to sell off the high of that. Again, I call these hidden channels because you're drawing them kind of the opposite way that most people draw them, and it really fools a lot of rookie traders into taking those failure patterns for you. So 87.23 is that target as we go lower. And then I don't anticipate it, but if all hell breaks loose and the market just runs lower, right? You know what I mean, right? If it does one of these things, and it just kind of grinds lower here, what's the pattern? The 2 try breakout, right? Strong move down. It's obviously bearish now. 1 try for the bears, 2 try for the bears. Again, the ideal is to get that trap above that high, right? But as long as you've got enough space down here, as long as you've got a bunch of open space down here, you'll be fine, right? Look for the buyers trying once. Look for the buyers trying twice. Once we get that nice strong signal, now we know where all those stops are, And we're going to need those stop loss. Remember, what's going to happen is as the market goes lower, the sellers in the market will take some profit. Then as it goes lower again, the buyers will come in. They'll try to buy it back up. That's why I like to look for 2 tries. And again, if I can get a trap, even better. Traps are not required, though, unless you are running out of open space, right? So if this was to go all the way down, then 1 and 2, okay, now you'd want to make sure you have that trap pattern, right? You want to make sure you have the trap. If you get it back up here, right, strong move down 1 and 2, that's fine, right? See the difference there? Okay, so if you have enough space, you don't need that trap. The trap is always great, by the way, right? That really increases the odds of success on that trade. The most important thing, though, is know where you're trying to go, right? We got the next target there at 87.23. That will determine what type of setup that you want to use as the market goes lower. And then let's do, I think probably the hardest part about this chart is how do you sell off the high? Right? That's the hard part here. Again, a lot like we talked about on the S&P, right? If we go into that range and go sideways, well, now that, right, what does that do? That absorbs a lot of the bullish momentum. So now when I go above that range, again, I want to sell above the range, back into that range. But remember, we're not bearish, are we? Right? How do you sell a bull market? Very, very carefully, right? If I can make a joke of it, right? But the bottom line is, I want the buyers try once, buyers try twice, and the goal here is to grab that, and this is kind of a nested failure with trap high on this. You want to try your best, because again, the buyers have control right now. I want to sell above the range. I want to use these levels of resistance up here, but if this thing really cranks going higher here, let them try once, let them try twice, right? Ideally, it's that trap high. Bare minimum will be a double top, right, off of these 2 tops right here. Ideally, will be a trap high. Buyers try once, buyers try twice. What do we call that? We call it a crown reversal pattern, right? So that's a great setup as we go off those highs. And then again, don't forget, if we make a big run, we hold that pullback, there's always a chance here these buyers could break free of this range. So keep your eyes open for a 1, 2, 3 breakout. It's the same pattern as going lower too, right? 1, 2, 3. I don't even try to buy that pullback. Right? Trying to buy that pullback. How many times? Strong move up, pullback fails. Strong move up, pullback fails. They've already failed twice. Why would I trust them a 3rd time? I hope you can see my point on that, right? So I don't care how strong the move is. That was a strong move. That was a strong move. I don't care how strong the move is. I'm going to wait for proof. Show me proof. Show me you want to buy these highs, buyers. Then once you show me proof, now I'll trust you. And you're right. You know, I miss some trades every once in a while by doing that, but I'd rather optimize my strategy for the best reliability, right? There's no trophy for taking the most trades. Okay? The only person that makes money when you overtrade is your broker. All right? Your broker's not going to like you very much anymore when I teach you how to stay disciplined and patient to wait for the most reliable trades. Because reliability is really all that matters if you're serious about a long-term trading career, right? Anybody can get lucky and jump all over the stuff, right? But getting lucky every day is very, very difficult, right? That's where you've got to focus on probabilities. And as we go higher here, right, I wait for that pullback to hold, show me you mean it, and we're buying that pullback off the low of that, right, off the low of that hidden channel. Now, where's my target at that point? Well, we get the big round number there at 9,000. Where's that prior high? Yeah, as you can see, there's not a lot up here, right? There's nothing over here. So we're right back to those all-time highs again, which means really at that point, our goal is going to be a 1, 2, 3 breakout, get in off of the low of that hidden channel. We know that 9,000 is a big round number overhead, but in all reality, we're going to probably want to use 1, 2, 3, right, that measured move, right, for your, you know, kind of interim target, and then leave that runner, trail your stop, and maybe we get lucky for that big juicy target up around 9,000. We'll see, right? We'll see. My main focus is always knowing where to get in. Once I'm in, then I can manipulate my targets and go from there. Great chart here on the Nasdaq. Make sure you see the clear difference between who has control of the Nasdaq and who has control of the S&P 500. Let's keep this party rolling though. Last but not least here, Let's grab some gold. Now, gold, just like last night, is probably the most challenging out of all of these markets. You can definitely see that gold now has gone back up into that triangle that we talked about in last night's newsletter, right? And of course, you can see momentum is bullish, right? As we go lower, the bears try once, the bears try twice. Now, that looks familiar, doesn't it? That pattern, I swear, I've seen that pattern somewhere, right? It's a crown reversal. Right? These patterns happen all the time on all of these markets. Anyways, we know the buyers, right, have momentum on their side. In fact, you can see they finished the session off with what most likely was just sellers admitting they were wrong, and the price slips back up into that 77.5 area, right in the middle of that triangle. So we know we're bullish. We know that's for sure. We want to buy at a level of support. What else do we know right now? I also know, I'm sure most folks will probably see this as a spike in channel. Now, spike in channels are really powerful tools because they tell us to look down at the base of that channel and buy those pullbacks there. If you're a client of mine, you know we always look for those spike and channel patterns. It's such reliable, right, chart patterns. So remember, anytime we see a spike in channel, I'm always watching for, right, those deep pullbacks. That's one thing we're going to look for the buy side tomorrow on the gold. I think the biggest problem, though, is going to be walking into this range up here, right? You know, we could easily see this market get stuck and just start going sideways up here. And if that's the case, we'll be bullish into a trading range. So I want to make sure I get prepared for that because we may end up going sideways up here. The channel may start to dissipate and we may go sideways into a range. We may also make a run all the way up. And that's going to be a difficult spot because we're not going to want to buy high up there. Look at that big wick, right, from earlier on in the week. We don't want to buy up there. We're going to want to be a seller because it's a range, right? It's a range. And what do you do with a range? You buy low and you sell high. But how do you sell high in a bull market? Crown reversal. You got it. You got it. I'm glad to see you're paying attention out there. Okay, perfect. So let's play the game first. What if we get the pullback, right? The pullback. Now, the pullback, I've identified a couple levels here, right? The 67, the 64.9. In all honesty, guys, I just want to get underneath this channel. If I can get underneath this channel, now I've got them right where we want them. Wait for those bears to try to take the short. Okay, remember, it's a bull market now, so the sellers are not on the right side of the market. Once those sellers commit, now I can go out and I can buy into those stops. In fact, hopefully we'll get a failure into pullback combination, right? That would be ideal, wouldn't it? Okay, that's something to keep an eye on for tomorrow. A failure pattern, a seller failure pattern, right, into a bullish pullback on the way back up to retest those highs. Now, some food for thought. If we do make a real strong move down, I still want to be a buyer down here because I've got levels. You know, I try to simplify this chart as best I could, but we do have a lot of levels down here. So if we do get a real strong move down, I'm still looking to be a buyer, but now I'll let the bears try once, try twice, and then I'll make the move. We call it a nested failure pattern, right? And again, don't forget, right? Don't forget all of these patterns. I give a much deeper dive into my failures, my pullbacks, my trap patterns. Everything's covered in that free trading course, so make sure you grab a copy of that. So those are the two patterns I'm watching for as we pull back. Is it a shallow pullback with a failure going higher? Is it a deep pullback with a nested going back in? What if we end up sitting sideways here? If we go sideways, what do? We use the size of that range to identify the buy zone underneath. I don't know enough about it yet though, right? We don't know where that range will be yet. Once we do know where that range is, then we'll use the size of that range to find our level of support. Okay, once we know where support is, now we look for a two-try failure pattern and we simply buy underneath it. Okay, very, very simple pattern. But again, what you want to do is you first want to make sure you have that range. Once you see the range confirmed, use the range to find the level of support. Then wait for the pullback. Wait for those bears to try that breakout pullback pattern. That's really all this is, right? It's a failed breakout pullback underneath the low of that range. If we really get lucky, we'll get a nice deep pullback down into that 67, 64 area, right? And we can look for that failure into pullback combination pattern. Okay, and again, you'll see a lot more examples of that on the free course. But let's talk about now what if the market goes higher here, because I really think that's going to be the biggest challenge. Now, the bottom line is I don't want to buy anything up top. Okay, so as we go higher here, here's one pattern to keep an eye on. If we do see a strong move up, very strong move up, we know the buyers are probably going to get another leg. The problem is we're running right into that level of resistance. So if we get a strong move up, if we can get it before we get to that high, I can look for a trap entry. This is obviously going to be a quite aggressive setup. So you're going to want to make sure that that move higher is really convincing. Okay? It should be really, really convincing. In fact, it'll look a lot like this, right? Strong move up, bears try once, bears try twice, trap low. That's exactly the type of pattern that I'm looking for up here tomorrow. But again, right, no wimpy moves higher here, right? Going to be a very strong move up, and then look for, again, right, look for that trap low. Remember, trap patterns are my favorite patterns when I'm running out of open space. Now, what if we don't? What if we get the run up and we just can't get in on it on the way up? Now what do? We have no choice right now but to wait. Do they hold that pullback and run? Do they hold that pullback and run, right, to go higher with a 1, 2, 3 reversal? Buy the low of that low, right? Do they hold the pullback and go? Probably not. They're going to probably go up, try once, try twice, and this might be the best trade of the session tomorrow if we get that rally higher. Again, once we retest those highs, let those buyers try once, let them try twice. Because you're going against the trend, I'll be looking for that trap high. Again, bare minimum is a double top. Best idea here would be a trap high and selling it right back down again. So gold is all set to go here right now. We're looking for a pullback to be a buyer. Stay away from the middle. And again, if we can get in off of that trap before we go higher, right, we'll definitely take a swing at that tomorrow. If not, the crown reversal to sell it back down again. So hopefully you guys learned a lot in tonight's video. We are getting all prepped up for tomorrow's trading session. And I'll tell you right now, right, if you're with me tomorrow in the trade room, we'll be executing all of this together every morning like we do every morning. And I would recommend come out and trade it with me every morning at 8 o'clock Eastern time. Now what you want is you want the advanced course. The advanced course includes our beginner, intermediate, and advanced video classes, right? It's a professional grade trading education that also includes our daily trade room, all the ongoing support, all the tools, all the checklists. You can learn more about that on our website. Now, getting registered is very easy. If you're on YouTube right now, I'll put all the links in the description of the YouTube video. If you're on the blog at Sideways Markets right now, I'll put the big blue button right below the video tonight on the trading blog. If you have any questions here this evening, don't forget you can always call that toll-free phone number. Use that live support tool. I'm always standing by to answer all your questions because I don't want you to miss tomorrow's setups. And as always, if you're not quite ready yet to be a member, make sure you grab that free trading course as part of our free trial. Again, all the links are linked up in the description of this YouTube video. But on that note, I will wrap up the newsletter for tonight. I've taken up way too much of your valuable time. Hope you learned something. Hope you use it to earn something. At the very least, I hope this knowledge helps you avoid all those traps those rookies fall into tomorrow. So come out and join us tomorrow morning, every morning, 8 o'clock Eastern time. If not, we'll see you guys next time, right back tomorrow night, the next edition of our nightly newsletter. My name is Joseph, by the way. Thanks for being here. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.